All right, good evening, everybody. Um, so I'm going to start off with a little bit of a strange comment here. Um, I messaged Shorty. I didn't get a reply. I don't know how to deal with this gap on ES. Um, so basically, ES has switched to, I guess, the March contracts. Um, so like if we look at TOS, uh, ES is trading at like three 39.70 and 88 cents. And then if we go back to trading view, we're up in the 4,000s. Um, so it is moving up, but I'm not really sure how to deal with this as far as charting. Uh, this might be a little bit confusing for some people. It's confusing for me. But basically, today was like the rollover date for, you can see it down here, contract switch from ESZ 2022 to ESH 2023. Uh, so yeah, I'm not really sure how to chart this um, as far as levels because um, our levels are going to be off. Anyway, we'll probably just chart SPY today and until I get an answer from Shorty on how to deal with this. Um, and try to look at some other tickers. Um, yeah, super weird. But I wanted to start off with a little bit of education. Sorry, zoom out here. Um, First, we'll talk about market structure. All right, so this up here, if anybody's willing to talk, we saw this today on ES. Does anybody know what this is called? Anyone? I have a bunch of very quiet people today, apparently. So this here is going to be higher high, lower high, higher high. And then technically, this one here will be another lower high. Uh, and then we're just chopping sideways. We're not making higher highs. We're not making lower highs. So this area here is consolidation. Also is considered an island top. And where you see like consolidation like this, you want to draw a box around it. And when you break below this box or above, you can break in either direction. But if you measure the box itself, so this one is, I mean, it should be positive. I should measure from the bottom to the top, but so positive 1.67. And then you would measure down when you break the box. That's going to have to be good enough. And you would also measure to the upside just in case you break to the upside. And gosh, it's impossible to get these perfect, but there we go. That's going to have to be good enough. So when you break the box, the expected move is going to be the same distance as the box. So to the upside, we would see 1.67 move, and to the downside, we would see a 1.67 move. Of course, nothing is 100% in stocks, but that's what you expect to see. And so then this here is going to be our lower low. I'll put it here, I guess. And for some people, this might be like super basic. I know this is, but just in case we have new people in the Discord that don't know this per se, this is a lower high. Right, I'm doing this wrong. This is a higher low. Lower low. I think I literally have this backwards. Sorry, this is a higher low. I hope somebody in the Discord is like correcting me, and they're not, I don't think. So my apologies. Higher high, higher low, higher high, higher low, lower low, lower high, lower high. Or sorry, this is still lower low. And then lower high. And then finally here we have our lower low. So everybody should know, you know, the market doesn't move straight up, straight down. It's going to move in waves up and down. And where this becomes important is these, if we can imagine some candlesticks, I'm trying to think of what's the best way to draw this. I'll just use this arrow tool. So let's just pretend these are candlesticks down. So if we have a bunch of candlesticks, you know, going up here, this is actually working out pretty well. And then we have a little pullback. This is where you see your bull flags and bear flags. So our bull flag, the top of the flag would be this here. And the bottom of the flag would be the bottom of these candles here. And then the flagpole is going to be, you know, these candles from the bottom to the top. And if you're being safe, your entry normally is going to be where this last candle touched the top of the flagpole. When a candle comes back up and crosses above this level here is where you would enter long. And you would play it to the upside. And you draw your fibs from the, oh, sorry, wrong way. You draw your fibs from the top to the bottom. And normally your first trim for profits is going to be the 1272 level. So your fibs you draw from the top of the flagpole down to the bottom, and then that will show you your profit targets. So you would trim at 1272, you would take your next trim at 168, and then your last trim or at 1786. And this is all like great information. This is like how like most technical analysis books would tell you to trade, how a lot of traders will tell you to trade. But we do something a little bit different, which is if you pay attention, like let's just say throw a line up here, and let's say this is uh, whatever 12 to BPOC, right? And let's say we've got candles coming up here, and we cross above the VPOC and come back down and retest it, and then we rip, right? And so these are our candles coming up here. You should be noticing a pattern. I'm not going to draw all of them. And then we want to see 3 candles, right? Close inside above the POC. And then when we get a retest here, we're going to go long. And so what's actually happening is instead of entering when we cross above the flag and possibly getting faked out, market makers know that retail traders trade bull flags and bear flags. Market makers don't trade bull flags and bear flags. So what we're doing is when this flag forms and it retests our level here, we're actually entering at the bottom of the flag and playing it up. And so then when we cross above to where retail's hopping in here, roughly, the market makers might do a little move like this up and then come back down and then break down, even further. Well, for us, we're going long, we're entering here. Our stop loss should be based on some kind of technical analysis here. And our profit's going to be, at our 272 level. And so once they come up and we see this rejection, and it looks like they're trying to fake out market makers, you can close the position early, or, at that point, you can move your stop loss up to where you're like break even. And that way you're basically you're getting a better entry than retail that's entering at the break of this flag. So if you're paying attention to Shorty, that's what he's teaching us, is to enter at the bottom of the flags on the retest of this level rather than entering at the top with retail. So Shorty is all about, reversal trading and not doing momentum trading where we're, the candles are already heading in a direction and you jump in that direction. You're more likely to, catch the top or whatever. Whereas if you're trying to play the bottom, on a trend line, you could still get faked out, but more often than not, you'll catch more of the move than getting faked out a bunch. So that's how we're entering plays. So that's why when we talk about, these, you want to see 3 5-minute candles close, either above or below. So if this was a flag coming from the top side, down, we're taking the retest here, and then we have, whatever, our 3 candles closing inside here. And then once we finally get the retest here, we're going to go long. So hopefully that makes sense to everybody. So understanding your market structure is important. Understanding, like how to play the consolidation. We did this live today in Shorty's Discord, or I called it out live today in Shorty's Discord. And I'm not saying that from a place of ego, but more from a place of hopefully people, because I was trying to teach it live as it was happening. So let's go take a look live here. I deleted the box that I drew, but if we drop down to the 5 minute, we can draw the box again really quickly. I actually remember exactly how I had it drawn. I excluded like this wick up here because it was just too high. But here was our consolidation from here. And if you're to draw your, take your measurement tool and measure this box um, bottom to top, like I was talking about, it's at 0.29%. And then we measure to the downside. And I think you'll see actually, I think I took lots of this. I think I took this. Yeah. This candle was not part of the consolidation. And then, so this is 0.28. And when you measure this one, it actually came right to 0.28. This candle here. So the measured move played out, and this ended up being a good trade once it broke the box here. And there was also another indication that this was going to happen, and I was talking about this live today. And that's basically from this point down, this whole consolidation area for the most part, we had volume decreasing. I mean, we had a couple candles that were a little bit bigger, but overall, volume was decreasing down. And then as soon as we got to this candle here, and this was the candle before it broke the box, we started to see volume ramping up. And we see volume ramping up on a red candle, or in this case, a blue candle. I don't use red for psychological reasons, but so we see volume start to increase on a red candle after it's been decreasing the whole time it's in this consolidation zone. Pretty good indication that this is where we're going to break through the box and see downside. If the inverse happened, if this was a green candle heading up and we start to see volume rising, pretty good chance that we're breaking the box to the upside. And I talked about this also in the Discord today. There's a book called Volume Price Analysis by Anna Cooling. She talks about exactly this. And oh yeah, George, it could be considered distribution as well. Yeah, absolutely. There's a book there's a book called Volume Price Analysis by Anna Cooling. The link for it is in the description of this video. If you want to grab it, but she talks about exactly what I'm talking about here, and it's an amazing book and one that you definitely want to read. All in all, though, today was a little bit rough to trade. Hopefully, people had a good day. We had some great call outs. Earth, myself. I know some other people called out stuff, but they weren't in voice, so I wasn't really paying attention to them. I think the Big Bull called out some good stuff, and I'm sure Slabby did. He calls out good stuff every day, and VJ, I'm sure as well. But yeah, just in the voice chat, we had me and Irv calling out plays. I didn't catch anything off the open here, but I know we took the retest of something. I want to say it was this trend line here. We took long. We caught the break here of the consolidation area. And then we also caught along here. So yeah, good trades, everything. It was a good day. Where was I going next? Sorry, brain dead. Oh, so Um, if you have the oh, why do I have this twice? If you're in Shorty's Discord, that's not what I'm looking for. So strange. Yeah, that's not what I'm looking for. Why am I losing my mind? Where's the is it orb zones? Yeah. Or is it too late now to see the fibs? Yeah, they're gone. Oh, I was going to talk about the orbs, but also this shows the IBL and IBH. And interesting days. So, this is our IBL here. IBH was here. And we never had a candle close outside of the range on either side. Um, but we still never made it back down to here. And at a point, I thought we were going to have a range day. And then we started consolidating. And I was thinking we were going to have an extended day. But yeah, it was a pretty funky day. I think this initial move, the rest of the day is just waiting for like the um, news tomorrow morning before open. IBL is initial. Oh, why can't I think tonight? I mean, I should be frank with you guys. I have a pretty bad migraine, to the point where like I almost threw up a minute ago, and my brain is pretty. Oh, it's initial balance high and initial balance low. I couldn't think of the word. Um, and so, how you find your initial balance high and low? I'll go over this again. We went over it. What was it, like Tuesday night, I believe? But you take your first hour of the market. So like you could just switch to a 1 hour candle, and or actually no, you can't switch to a 1 hour candle because of um, it opens at 9:30. But you take the low of the first 1 hour of the market open and the high of the first hour of the market open, and you would mark those two levels. And then once you have that, you just wait to see. Um, Basically, you're waiting for a 5 minute candle to close either anywhere above this level. So the whole candle doesn't have to be above, just the candle body itself needs to close above this level, or a candle body needs to close below this level. If either of those two things happen, so for instance, if this candle here closed above the IBH, it's just telling us there's an 88% chance that this is the low of the day, that price will never go below this level. Um, if a 5 minute candle closes below the IBL, it just tells us there's an 88% chance that this is the high of the day, and price won't go above that level. So basically, roughly like a 90% chance, if you have a candle close above or below, that it's either set the low of the day or the high of the day, and that price will never pass through that level. Trying to think what else. I feel like I'm just being redundant because we've talked about, like I've done. This is the third class this week. Um, we've talked about our different volume price or volume profiles. I think I'll just go over them again. I never went over them really in depth, I don't think. Oh, great. Where's that drawing I did? I knew I should have erased that when I was there. Oh, well. I'm going to have some random drawing when price, in 20 years shoots way up there. But so, let's just hide everything. Let's turn off the view up. We can leave volume on. But so, for Shorty's Discord, we use volume profile to find our plays. We also, draw our technical analysis flags, pennants, whatever, rising wedges, falling wedges, all of that stuff. But our main focus is going to be our volume profile. And basically what this is, down here at the bottom, we have volume based on time, whereas volume profile is going to be volume based on price. So this is showing us where buyers and sellers are showing up based upon the price on the chart versus time on the chart. And so what's good about this is if you have a lot of buyers and sellers that show up in an area, the next time you revisit that price, you're probably going to have buyers and sellers show up again. And I'll show a good way to think about this, but let's see. Why is it only show? Oh, I'm on the wrong time frame. Like, why is it showing me 3 days or whatever? So this is going to be a good example here. If we look at this level here, oh, it turns on all my drawings. Nice. So this red line on the chart or on the volume profile is going to be our POC, which is going to be, which is considered the point of control. The point of control is going to be where the highest volume was traded on this particular day. So the highest volume of trading took place here, and we would label this, or at least I do, you don't have to, but November 24th VPOC. And then the distinction between a POC or a VPOC, point of control, on the day that a POC is formed, it's always going to be a virgin point of control. And basically, during regular trading hours and extended trading hours and pre-market, this level can be touched as many times as it wants to. But once the market opens and price leaves it, it's a virgin POC. Once price comes back and touches it, then it turns into just a POC. This is an important distinction because virgin POCs are about 10 times stronger than POCs, and they act as price maggots. I mean, POCs do as well, but just not as strong as a VPOC does. And the way you want to think about this is like, if you're a retail trader and you were to buy up here at this price, and then the market sells off, so here, for instance, let's turn our candles back on. So you bought here, and then we have this big sell off, right? So you're buying at 4,035, and it sells off by 100 points basically over 3 days. What happens next time price comes here, as far as you're concerned? I mean, this was a news day, but so I picked a really horrible example. but generally, retail investors are going to sell here at break even when price comes back to there. Whereas market makers, they're generally looking to buy down here. And if, like, so let's say market makers started adding onto a position here. They don't move their buy orders, but let's say they have a limit order, sitting right about here at this level, for like $500 million worth of ES. When price takes off, like, so they're adding position here, boom, 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 grabbing more cheaper, price starts taking off. They're not buying anymore. Their order stays down here. Price comes back to here. They're picking up more shares. Dun, 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 dun. For them, it takes a long time for them to buy a full position, and then price rips up again. Their order's still sitting here. So the next time price comes back down to here, they're going to get filled even more, and then we just rip off up, right? Whereas retail, we're pretty good about getting faked out and getting sucked into buying here. And so then, price leaves, and then when it comes back to there, we're generally dumping our position. And then you'll see the market, coming back down. So that's kind of how volume profile works. And then with volume profile, we have different types of days that we look at. We have D-shaped volume profiles. These are going to be range day. I mean, like consolidation, where we just consolidate sideways. This here is going to be a B-shaped volume profile, a lowercase b. On these, you see sell-offs, or actually, I'm sorry, this is actually going to be a double distribution. So it's kind of an ugly one, but this here, as soon as I find my marker again, I literally never use that tool. My gosh, somebody saved me from myself. Where's the highlighter? There we go. So it doesn't look like a great one, but this is a B, an uppercase B. So it's double distribution. We opened down here and probably consolidated a little bit, and then shot up and consolidated up here. So if I turn on the candles, yeah, so here's our consolidation, and then ripped up and chopped sideways up here as well. So let me just erase this really fast. There we go. So anyway, we have our D shape, we have our B shape, like uppercase B, which is a double distribution day. Oh boy, this is fun. I should not try to teach when I have a migraine. So this one here is a lowercase b, as you can see here. And then this is a P shape. It's not a great example of a P shape, but this is a P shape. And what you want to notice with P shapes, so when you have a P shape in an uptrend, so in this instance, price has been coming up. And then when you see a P shape, it generally indicates a reversal. And then the inverse is when you have a B shape, and they never look perfect. But when you have a B shape in a downtrend, is generally going to be a reversal as well. So if you're looking for swing trades, now you know what to look for. When you see a P shape in an uptrend, you're probably going to reverse to the downside. When you see a lowercase b in a downtrend, you're going to see probably see upside the next day. So that should cover that. That's the four main types of volume profiles that we look at is going to be D shapes, consolidation, our lowercase b's, which are going to be the days that we have, downside like this. This is actually also a double distribution day, but um, this is a double distribution as well. Um, gosh, here's a D. This is going to be our double distribution as well. A lot of ugly volume profiles here. This is a pretty ugly P. This one here is definitely a P. No, it's a double distribution. I want to turn the candles off for a second. Okay, this is a P. It looks almost like a little bit of a double distribution, but this is an uppercase, or yeah, an uppercase P. Sorry, I'm trying to find a lowercase b. This is a lowercase b. And it looks like recently, like, there's no really clean B's or P's, but that's okay. When you see a P, for example, or a B, basically, I'm trying to look for a good example. But so if we look at this here, this is a P shape. And when you have a P shape, generally, like on the following day, or even like this day here, when price leaves this and comes back inside, you're looking to take the next high volume node as your entry for longs. And on a lowercase b, if price comes back up, you would look for the next, like the second high volume node as your entry for shorts. And so, if price happened to come back down to here on this day, this would be a good area to enter long. And you'll generally find as well that price a lot of times will come to the far side of this volume shelf before it bounces. And then speaking of volume shelves, so I'm sorry guys, I feel like I'm all over the place, but doing my best here. So our volume shelves, I'm going to zoom in. The way that you want to think of volume shelves, or the way I think about them, is like steps on a staircase or rungs on a ladder. And basically anywhere where you have a step or a rung is somewhere that price can hang out. There's something to stand on. And the areas in between are considered skinny bellies. And there's nothing for the price to stand on there, so it's not able to hang out in those areas. And so, normally like later in the day, you can look at these and see like if price breaks through an area where there's a volume shelf, it's probably going to fly to the next volume shelf, or breaks below, it'll probably fall down to the next volume shelf there. So if these are our volume shelves here, this one doesn't give you very much room because it's kind of one big shelf here. But if I turn the candles back on, you'll see like these areas that I've highlighted are going to be the areas where the stock's able to hang out. And anytime it breaks through, it'll just fly down to the next zone or fly up to the next zone. And you want to look at that again, for subsequent days. But so if we turn on the candlesticks here, and we can extend this shelf out here. So So again, not the greatest examples, but um, this is a volume shelf because there's candles through here. It's a terrible example. Consolidation through here, a little bit of consolidation here. I picked the worst day. This is hilarious. Why is this empty? Oh, this is, God, you know what I'm going to do? I am going to, it's because I'm on ES and we're looking at after hours. There's no volume on ES like overnight. I'm really sorry, everybody. Let's go to SPY. For volume profile on SPY, you turn off your extended trading hours. You just use regular trading hours. And now this will start looking a lot cleaner. We'll go to somewhere where I don't have a bunch of drawings. I mean, this will make the P shapes and B shapes a lot clearer, and it won't look like we have double distribution everywhere. Alan, with the news tomorrow, it's really hard to say. So I'm actually going to be like, I'll probably look at some stocks, but it's kind of hard to say what anything is going to do tomorrow with the news. So there's a volume shelf. Volume shelf. God, you know, honestly, I don't even like this one. It's like, so this is kind of just one big volume shelf. So let's look for a day where we have like, oh, here we go. So this is a very clear, defined volume shelf here at the top, right? And I will show you guys how to trade consolidation. I mean, other than what I showed you, like with the breaking the box, you can trade in the box, but you want to grab calls at the bottom of the box and you want to grab puts at the top of the box. But you also want to be paying attention to volume so that you're not grabbing a play when it's about to break out of the box. So like I was showing earlier where volume was decreasing as we were coming down to the bottom of the box, and then on red candles, we started to see volume ramping up. So you want to watch for that to make sure you're not buying on a red candle where volume's ramping up. Joseph, on ES, I use extended trading hours for volume profile. Anybody who's still watching with my insanity tonight, you're the real ones. I love you. I'm just going to call this a volume shelf here. But so, you know, back to what I was talking about, these areas where we have these higher volume shelves, stocks will consolidate through there, or price will consolidate through there. These areas where we have a skinny belly, price will fly from one to the next. Skinny belly will fly from one to the next. Skinny belly will fly from one to the next. I think a lot of you have seen me trade live, so you know I'm not a complete spaz. But like I said, I am feeling like crap. I'm sorry. I almost canceled the class, but I'm like, I really don't want to do that um, unless I have to. All right. So now just to find my drawings. Here we go. We're going to use the replay feature. So now this looks a lot clearer, right, everybody? Now that we're not using pre-market and after hours. So the fact that we have candles here and then consolidation through here is the reason that this volume shelf was able to form. So quite a bit of trading in this area. And as you can see, as long as your risk tolerance is good, if you're taking a long position here, at the bottom of the volume shelf, and you're looking for, whatever your 2-to-1 risk to reward. Technically, if I'm entering a trade here, once we visited this area and come back down to it, I'm like, gosh, my price target should be somewhere close to the high of this. Probably, I'm not looking for it to go all the way, but it's probably going to retrace pretty close to the high. And so I can enter long here at the far side of this volume shelf, and go long and play it to the upside. Of course, that's not always going to work out in your favor, but in this instance, it did. And then again, once we come to this level here, price is able to hang out and consolidate because we have this shelf for it to stand on, or this stair for it to stand on. Alex, so every single trade I take is planned. So let's just say, for instance, I don't know, I'm trying to look for a trade I would take. This is good enough. So let's just say, on this day here, I'm taking my value area low. And price breaks through here, right? And I'm looking for 3 candles to close inside. This is what we were talking about at the beginning. So here's my first candle closes, second, third. And so now I'm looking for the retest of this level, which I got on this candle here. This is a little bit sketchy, but I already know that I've got a wick all the way up to this level, right? So there's a chance, if market makers are wanting to fake me out, if I enter short here, there's a good chance, and I would be saying the same thing if I couldn't see this wick. There's a good chance they're going to take price past this wick, because a lot of retail investors are going to go, oh, I'm going to put my stop loss here. When I go short here, I'm going to put my stop loss right at the same level as this wick, because market makers probably won't bring it past this wick. And that's where you're wrong. Market makers absolutely will bring it just past that wick enough to take your stop loss and then run with it. So when I enter a trade, every single one is planned. I use my my either long position or short position in TradingView. And for every trade, I want to get at least $2 for every dollar that I risk. So if I was entering this trade here, my stop will be here, and my profit is going to be at least at this level. Yes, I'm always using the previous day. We'll go over that a little bit later. Yeah, I don't use today's because it hasn't formed yet. I do use it a little bit as it's forming, but not very much. I don't want to start reinforcing bad habits, but I do watch the developing POC. I do watch the developing value area high. I do watch the developing value area low, but mostly just as levels to exit trades, not levels to enter trades. So, yeah, so every single trade is planned out. And this is one cool thing you can notice with TradingView is it actually shows you. It might be a little bit hard to see here, but it highlights. Um, it highlights like a different color green as the candle's going down. You can see how close you are, like to your take profit, because the color changes. And same thing with the red. Um, it'll happen when you're in a trade. Like if it goes into the red zone, this red color will start changing. But so yeah, every single trade I plan before I enter the trade, and I have to be able to get at least $2 for every dollar that I risk. So let's say, for example, this developing POC is like right here. I'm probably not going to enter the trade because I know this wick is here. So my stop, like even worst case, has to be, like a little bit above. And I would have got stopped out. And if the developing POC is here, I'm only getting $1.50 to my $1 I'm risking. So every trade needs to be planned. And you have to look at everything, like not only the developing POC, but if like the previous day POC was here. And it can be really annoying because sometimes you'll see like, oh, this is such a great short, but like the previous day POC is sitting right here and you can't take the trade because there's not enough meat on the bone. But that's where patience really plays off, like, or really pays off. Um, so you wanna make sure there's nothing like getting in the way of you taking this trade. Um, no POCs, no volume profiles, no support turn resistance. Like you really want to just look for those A++ setups every single trade. And then that's one of the distinctions between, like a successful trader and an unsuccessful trader is making sure that every single trade you're getting adequate risk to reward. Like as traders, as retail traders, there's very few things that we can control, but we have to make sure that we control the things that we can control. What we can control is what we're risking and making sure that there's enough meat on the bone for every single trade. And what we can control is where our stop loss is and where our take profit is. And if you respect those every single time, so you set your stop loss based on, actually, and I'm glad I'm talking on this, you never set your stop loss based on a percentage gain loss. You never set your stop loss based on a dollar value gain loss. And you never set your profit on a percentage gain loss or a dollar amount gain loss. Like actually, if you can turn off your P&L while you're in trades, that's even better. Um, and what you want to do is just like I said here, we're going short here. Our stop loss has to be above this wick in case market makers take it, and I meant above this wick here. In case market makers bring that candle slightly above this one, you got to make sure that your stop loss is above that. And then, sometimes like it might even be like, oh, I need to bring my stop loss above this here. If I didn't have this candle here, like my stop loss needs to be above this. And then in that case, like my take profit needs to be way down here. Oh, so Joseph, as far as TOS changing after it was acquired by Schwab, no. The only thing that's going to change for us is we're going to have to make like a new accounts and passwords on Charles Schwab, but Thinkorswim is staying Thinkorswim. There'd be riots if they got rid of Thinkorswim. So hopefully this makes a lot of sense to everybody. Every single trade, you want to set your risk and your reward. And sometimes, your reward might be more than 2-to-1. Like if you're doing an 80% rule, like this here, this is actually a pretty good one. We didn't get, well, actually, yeah, we did 1, 2, 3. Um, 3 candles closed inside, you would go short. You just kind of didn't get the retest. I mean, you did, but it was before this candle closed. But so this is the 80% rule here. I guess I'll just delete that. Um, so if you're playing um, this, you want your stop loss to be above this candle. And your profit target is way down here for the 80% rule. And 80% of the time this works. I've covered the 80% rule a lot, but if people want me to go over it again, I'll go over it again. But so you can see right now, I'm risking $1 to make 7. And like, these are the golden trades that we're looking for. I have concerns, right? Like in this trade, you can see I came down and I started consolidating, or what's really happening is I came down and formed a bear flag, right? And so if we missed this entry here, right, then we know our entry here. If we're playing a bear flag, or I just went over this, so hopefully you know your entry here, right? And then we draw our fibs, bottom to the top, right? Our profit target's going to be the 272 level. And what we're going to do is we're going to enter, 3 candles, 1, 2, 3, boom. You enter at the top here, and you're going to play it down. And if it reverses back up, then, you didn't lose anything. But this one played out. But if you did enter here, you're just getting less meat on the bone for your trade. And then we would have a different, short profit target for this one. I mean, technically we know. So my stop loss would be, slightly above this candle. And I want to make at least $2 for every dollar I risk. So, I mean, my profit target could have been way up here. But I know there's a good chance I'm going to the 272 level. So I'm risking $1 to make $9.50, right? On this trade. Way better than 1 to 2 risk to reward. And then, even with this, like if you take this trade and let's say, you hit your 1 to 2 risk to reward, at that point you can put your stop loss like slightly above break even, and then let it keep going. And then as you're getting closer, again, you can move your stop loss down, so that now you have profit, and you're still shooting for this 272 level. I mean, in this case, this would have been an easy trade. We had a 5-minute candle that just dumped. Like you wouldn't have had to be moving stop losses and worrying about any of that. You got it in one clean move, but we all know that doesn't happen all the time. So this one would have been nice. But if that's what's happening, you just keep moving your stop loss as the trade's happening. So Alan, I'm talking about this specific flag here. My first trim is going to be the 272 level, and not the POC. Because if I was doing the 80% rule from the top down, I'm probably going to be, I mean, there's a few areas I would probably be trimming my trades as I'm going down. And I was getting to that. But basically, let me erase this so it's easier to see. I just wanted to show on actual charts. Like I didn't measure this to know where the 272 level was before this happened. But I just wanted to show, like when you enter these flags, there's a good chance you're going to hit the 272 level. And that's your take profit level on a flag. And I mean, yeah, in retrospect, you can look and say, oh, well, if you held longer, you could have got down here. And if you held even longer, You could have got all the way down here. But this is a good level to take profit. But if you take like, whatever, if you take 10 contracts, sure, sell 9 or 8 here at the 272 level. Put 2 runners break even and see if you make it down to the POC or if you make it down to the far side of the volume profile. But this specifically is saying you missed this entry here. If you miss this entry, you're going to, or I'm saying if you caught this entry, you're going to be concerned about your previous day value area low here. This is a developing POC, so we don't even know where this is. When this, if I go replay back to here, like this POC is probably up here somewhere. I mean, we can figure it out actually. If we do fixed range volume profile from here to here, I mean, my POC is up here. So the POC didn't shift down here until the end of the day. Like even if I bring this down to here, the POC is still going to be up here. It was all this trading at the end of the day that shifted the POC down here. So, oh, and this is the developing. I don't know why I'm using this. Sorry. It's confusing. Like, I'm thinking this is the previous day because I normally have them drawn out, but whatever. We'll just pretend this is the previous day. This is your entry, 3 candles, boom, take it down. And assuming, well, this is the previous day value area low, you're going to be concerned, about trimming or taking profit in this area. Worst case, best case, you're going to see some consolidation before you see more downside. And generally it's going to look like, a bear flag forming. And so there's 2 ways you can do this. If you took one contract, you can sell it here at the previous day value area low. And then as this flag forms, you can just re-enter the trade short with a new contract. So basically you're rolling your contract down to a cheaper contract and securing the profits you had from your entry here down. So anyway, hopefully this makes sense to everybody. This is how we trade volume profile in Shorty's Discord, and this is what Shorty teaches. I didn't quite finish the volume shelves, but I'm sure everybody got the idea. We can fly pretty quickly, through these skinny bellies, upside, downside, but where we have a shelf, we'll bounce around quite a bit, fly back up, bounce around, fly up, bounce around, fly up, bounce around. This one, kind of duked people out. We do have, technically a very small shelf right there. But yeah, so up to here, back down, bounce around, up, and then straight up. So you can see we can fly through these skinny bellies quickly. Of course, like somebody mentioned in the YouTube, we don't know where these are as the day is developing, but you can look at the previous day. So here, for example, actually, let me hide this. We have a pretty good shelf here, right? And if we extend this over, does that kind of line up with this one? And then we have a shelf here that's lining up here. We have a pretty good sized shelf here. Right? Have a little bit of a shelf here. Or even better, you use your fixed range volume profile. On a larger time frame. Um, so we can grab like the run up. Well, that's not really showing us much here. But yeah, you can use fixed range volume profile, um, different areas to see where when you're grabbing like low to high, it's going to show you where buyers are stepping in, and when you grab low or high to low, it'll show you where sellers are stepping in. I don't draw shelves when I'm trading. Um, I eyeball it, if as like I said, as you get later into the day, um, you'll have a good idea of where the shelves are, and then you'll have a good idea of where you have skinny bellies, and you can just kind of see as price is coming to one that you're probably going to fly through it. And again, you want to be watching like your volume. So here, for instance, volume's trending down, right? And then it was here that we start to see volume trending up. So on this candle right here, um, we saw volume growing, and this is where we start to slice through um, to the upside. And then this whole area, God, I hate when these plus minus things show up. Um, we have volume increasing starting here. Sorry, that's not the best drawing, but you get the idea. Yeah, so on this candle here, we start to get increasing volume, and prices moving up as prices increasing. I mean, as volume's increasing. Pretty good, again, pretty good indication that we're going to slice through this and head upside. So you just have to kind of try to watch for that. All right. Oh wait, let me erase these first before I go back. And then we'll look at today. Um, so another thing that you can do with volume profile, like for instance, we were talking about this island top, and we drew a consolidation box around it. It looks different on SPY, but um, we'll just say this is it here. It's good enough for our purposes. Um, so another thing you can do when you have consolidation like this, I'm going to actually delete this box, but you can grab your fixed range volume profile and just grab that range, left to right. And you'll see that this is a D shape. I'm going to turn off my candles just to make it a little bit easier to see. And let me turn off my session volume profile. So on just this area, right, we have a D-shaped volume profile. And so we can grab calls here. I mean puts, I'm sorry, here. And we can grab calls here. You can also try to grab, puts closer to the top and calls closer to the bottom. But most of the time, you're going to be in this range here. And so if we just, put puts, puts, And then just to make it cleaner, we'll change these to green. And then again, of course, just when you're doing this, make sure you're always paying attention to volume. You don't want to get caught here where it breaks and you're buying here and it's going down, right? So, so you can see for the most part, you know, like even if you were to take calls here, for instance, right? You are going to have a little bit of a sketchy moment, but you know, again, if we're going calls here, right? Then we know my stop loss needs to be below that. And my take profit is going to be at 2. And I'm good, right? It gets sketchy for a moment, but it plays out. Same thing, you know, from the top. I'm not going to draw it again because, you know, it's going to work out. If you took puts here, actually this one you might have got stopped out. But I would want more of a wick, or I would want to see more of a candle above this before I would get stopped out. But if you got in here, maybe you got stopped out. But hopefully not. You saw quite a bit of downside. Actually, that's something I should put my short position here, and I'll explain why. So actually, before this blue candle, we wouldn't have known about this level. So our stop loss, you know, slightly above the wick of this candle. If we entered here short, or actually we wouldn't know about this candle either, but we could figure out like if our profits here. Yeah, I think this just all in all would be a bad trade, honestly. I'm trying to make it work. It's not going to work. So if I don't have a level up here and I measure down, you know, to where my take profit would be, then I just move my stop loss to where I'm getting at least, or no, it's still slightly above it. So my stop loss, then at that point I can move to where I'm risking 1 to earn the 2. And then this move here, this one candle, so I apologize, this would not have been stopped out. It would have been really close and it would have been sketchy. But this candle here, once you get this big move, you know, from our entry all the way down, that comes, you know, just like a hair away from our take profit, and then you start to see it reverse, you can do one of two things. You can just cut it and take profit there, or once you get 70% of your move, then you can just move your stop loss, you know, slightly above break even. And that way, you're not taking a red trade after you got most of the move that you were looking for. And that would be the only exception. Like if you get like 70% of the move that you were looking for, at that point, it's okay to move your stop loss to break even. But if you do that before that point, like if you get 20 or 30% of the move and then you move your stop loss to break even, you're probably going to stop out a lot at break even and not get the full move that you were looking for. And so over time, you're just going to end up shooting yourself in the foot, and you're going to be losing more than you're winning because your stop losses are going to be too tight on your trades. So you have to be willing to let your stop losses run. Sorry, it looks like I have people message or adding me. Yeah, Bean, I don't know. I've been feeling off all day, but it's okay. I'll be all right. Just woke up not feeling great today, but yeah. All right. So any questions so far? I mean, I think people are asking as we're going, but
I have a question. Earlier you had of labels. There were, I think it says something about rundown, um, value area high and value area low. Can you,
The
how did you find that?
IBL, IBH, you mean?
No, it said rundown.
Oh, that's the rundown from the volume profile. I mean the fixed range volume profile. Yeah, I'll go over that in a second.
All right, thanks.
Bear with me here really quickly. This is all December 8th. So, um I'm just sorry, I'm just like looking at this was a good entry here. Uh, I don't watch spy charts, but this was clean. This is our first test, on this day of this 2022 Virgin POC and the November POC. And then we came back and retested it, and this is a great entry long. This here is also a great entry short. Reason being, this here. Um, and this is a good point here. You have to realize in trading, like, you're not looking for an exact tap of your target. Everything is going to be a range. So when you're trading, you have to be open to being wrong a little bit. As far as like your entry, we know like we really want it to come exactly to this level, but rarely are they going to give it to us exactly. So we have to be willing to take a range. So basically, as soon as price crossed into this green box, we have to be okay entering early, anticipating that it might come to here and might even go past it a little bit before we get the move that we're looking for. Um, and when you do it again, same thing. You're gonna uh, you have to have your stop loss. You have to give it room and look for your $2 for every dollar you risk. Uh, I mean, I have this. Um, this was from a P-shaped, I think, volume profile or something. I don't remember what I drew this for, but this is an area that I'm expecting a rejection. So I'd be looking for something like this on this trade. Um, I wouldn't stop out until I hit this, probably. I don't know. Um, Another book. Oh yeah, profile is by far the best way to trade. Another way to, or sorry, there's a lot of ways to trade with volume profile. Uh, One of them is the opening drive. I don't see it too often, but if we go to like 6:30, I think I see one today. Yeah, so our opening drive today would have been from here. Um, when you see price drop from here down and back up, you try to look for a reversal here. Uh, yeah, but so again, in the links in the video description, you'll see a book called Volume Profile by Trader Dale. That's a great book to read. and he talks about the different volume profiles. I think the only thing that's missing in that book, and it's not really missing, he talks about volume profile for NinjaTrader, and then he tries to sell the indicators for NinjaTrader. And I'm not trying to say that like it's a bad thing. There's nothing wrong with that, but they just use like a session volume profile, and then they also have like a fixed range volume profile. You can get all of that stuff on TradingView for like $15 a month, um, and it's way cheaper than NinjaTrader. And again, nothing wrong with NinjaTrader, but just not the way that I do it. So let's go over how basically going through like charting, and we'll also cover like the rundown and the run up and all of that you asked about. Every time I'm looking at a chart, I'm going to zoom out and just look at where we're at. I'm not going to erase all my lines today. I'm not feeling up to it. But for if we look at the monthly candle, it's not really telling us much of anything. Little wick to the downside, but here we have like a hammer. And normally, if we get above that, we would normally expect to see more upside. From here, I'll go to the weekly. And same thing, I'm just kind of looking at like mostly at the weekly candle. But also you want to look at, the overall trend. So right now we're in a downtrend. But we're like on an upward leg of this downtrend, right? So some people would be like, oh, this is bullish. It is not bullish. This is not bullish. It wouldn't become bullish until we make a higher high. And to make a higher high, we would need to get above this level. Oh, I love that all of the stuff turns on when I do this. We would need to get above this one here, this lower high. Right there. Once we cross above this level, that's when we would flip from bullish to bearish. Right? That doesn't mean we can't have bearish days, but overall we're in a, or sorry, that we can't have bullish days, but overall we're in a downtrend, right? From here, I look at the daily chart. I'm pretty sure I drew these trend lines on like a 3-day chart. Or something like that. Yeah. This is a 3-day. I think this one could be cleaner. Yeah, there we go. So from the 1-day chart, what I do is I'll turn on my PVP, which is going to be the periodic volume profile. But in the search, you can just search for PVP, or you could type out periodic volume profile. And with PVP on the 1-day, I'm going to be looking at my settings. Volume area value is going to be 68. Row size is going to be 100. I'm going to start on the 12-month chart. And I'm going to plot my 2022 value area low, 2022 value area high, and my 2022 virgin POC, which is here. This should be red. And sometimes, depending on where price is, I might even plot the 2021 um, value area high, value area low, and POC. So once I've done this, I'll drop down to uh, my 1 month PVP, and I drop down to my 4 hour chart. And from there, I'm going to chart my November value area low, November value area high, and my November POC, which looks like it shifted a little bit. Oh, okay. Yeah, so the November, I guess I charted it. Oh no, I did this on purpose. Um, but so sometimes when I have two levels that are really close, I'll just make it one level. But I don't think this is quite as close as I thought it was when I did it. So it could also be that I charted it at the end of November. I don't remember. Or like close to the end of November and it shifted since then. Because when we come close to the end of a month, I'll start charting the monthly value area high, value area low, and POC. And then once I have those levels, then I go down to the 65-minute chart and I will switch my PVP to 7 days. And from here, I get my my weekly, my previous week value area high, value area low, and POC. I'm looking for my date range. I just want to make sure this is 7 days. Yeah, it is. Okay. So from whenever I charted these, this is now a new week. So these values have moved. So here, I have my previous week value area high, previous week value area low, and then my previous week, you'll see. It's down here. Do I not have, okay. And this is a virgin POC because this week is just ending. And price would have to touch it now that the week is ended to change it to a POC. And then from here, I'm done with my PVP. Now I'll use my session volume profile. And all I'm really looking at is going to be the previous day. And so here's my previous day value area high. A lot of times I'm just grabbing levels, like these lines I already charted. I just need to move them to the current spot. And so you can see here my 2022 Virgin POC and my previous day value area low line up with each other. So I just put a little dash and I'll put previous day value area low. And then my previous day POC. Oh, and these ones are supposed to be on the 30-minute. I forgot to change my time frame. I'll do that right now. But this will probably be good for you guys to see. They're probably going to shift at least a little bit, and they did. And what's important about that is you want to chart them on the right time frame, and they will move when you move to different time frames, but those levels are still valid on the time frames that you charted them on. Okay, even if they move. And then these are going to be, most of the levels that I'm looking at for tomorrow. And like we already talked about, I'm looking for retests. If you have, so this is a P-shape volume profile. If price opens above and then crosses back down below our previous day value area high, that's a very bearish indication. What we're looking for is 3 candles to close inside, which we've already talked about, 3 5-minute candles as a minimum. And then retest our previous day value area high. And then we're looking to play the 80% rule all the way down to the far side, right? If price opens below our previous day value area low, we're looking for it to cross back inside, 3 candles close, retest, and take it long to the previous day value area high. 80% rule in either direction. There's one distinction to the 80% rule from the bottom here, which is we don't have enough meat on the bone for this trade. So if we use our long tool, and we went long here, you probably want your stop loss, to be below this candle, or at least below this candle here, worst case. This is your price target. So you're getting 3.5 to 1. But with this POC here, there's a good chance that we reject there. And now we're, getting 50 cents or 63 cents on a dollar. The developing POC, we wouldn't know where it is, but if we did, this is still close enough that I say enter the trade. You're basically at a 2 to 1 risk to reward there. 1 to 2 risk to reward. But so that can be frustrating at sometimes. Like I said, you see a really good entry for a long position, but one of your levels just tells you, nope. We might end up doing something like this. Boom, entry, boom, boom, right? And it's just not worth the risk to reward on that trade. So that's how we trade. Hopefully that's really clear to everybody. I've covered that quite a few times, but the one thing I didn't cover a lot is if we open above our previous day value area high and come back inside, that's very bearish. If we open below and come back inside, that's very bullish. And that would also apply for previous week. If we open below it and cross back inside, that's going to be very bearish, and then retest and play it up. Or same thing to the downside. From here, I always end up doing this like after the fact, but you want to zoom out and there's a lot of ways to do this and no way is right. But if you grab the top to the bottom, this is going to show you your volume profile for the rundown, right? And so that's where, like you saw in my chart, so for instance here, rundown POC, or actually this one is a VPOC. And then you would have your rundown value area high, rundown value area low. I'm not going to plot all of those, and it's actually right here. So this level becomes really strong. This level, we basically have like the 2022 VPOC, the previous day value area low, and the rundown value area low. But for the rundown, you can also grab, for instance, this here. And same thing, this will show you where sellers are showing up, but more recent than going way back here. These are going to be more recent sellers. And so this is one area where, like if you wanted to find volume shelves, you can find them here, right? On your rundown. You can do the same thing on the run up. And you can also, chart these levels, your rundown value area high, rundown POC, rundown value area low. I prefer to do these smaller moves versus the whole move because this data is more recent. So it's going to be more accurate on where sellers are showing up on this area here. And then if I do the run up with my fixed range volume profile, low to high, this is going to show me where buyers are stepping in, right? And then again, my POC is right at this level, which again is just showing us this is just a massive, strong level here. So basically this whole range is a really strong level. Where you could see a lot of choppiness through here, or you could see like strong rejections up or down, or strong bounces or strong rejections from that level, right? So on this, you would plot your rundown value area low, rundown POC, and rundown value area high. And then those are all the levels that I keep on my chart. And I've gone over this a few times, but this is basically all that I have on my chart when I'm charting or when I'm trading, other than my VWAP. And I like to trade on the 5-minute for the most part, but I look at other time frames during the day as I'm trading. And for the VWAP, I use a VWAP with a band, so it's not like one set level, one individual line. It's a range. Everything in trading is going to be a range realistically. But if you want to copy that volume profile, or I mean that VWAP, you can just grab this one here, the volume weighted average price, and you can see the bands on that are huge compared to mine. But if you just change the settings to 0.13 and click OK, this VWAP will look exactly the same as the one that I use. So you can see, I mean, the levels are exactly the same, right? And this is all I use for charting. I do use the VWAP a lot as a confluence point. I know we used it today in trading. I want to say to take it long here, I think. Yeah, it was here. And that's about it. So again, I don't know what to look at on ES for tomorrow. I'm really disappointed that Shorty didn't get back to me, but I don't know how to handle this gap. I really don't. I don't know what to do. But for SPY, if we grab today with a fixed range volume profile, our POC is here. We have kind of a P shape. And we're not really in an uptrend. This is kind of just sideways. Like we started to move up a little bit, but not enough that I would expect a reversal. I'm kind of expecting just more upside tomorrow. We could easily come back and retest the POC before we go. But with the PCI data coming out in the morning, it's really hard to say. but I am expecting uh, tomorrow to be a pretty volatile day. We should see some pretty good moves. We're definitely going to see good moves before the open, an hour before when the PCI data drops. Um, and then next week, we have FOMC. So I'm expecting some choppiness. Um, and that's kind of where I'm at. Next week, I'll probably trade live on YouTube at least one day. I'll be trading live in Shorty's Discord um, pretty much every day. And we'll do a class again, um, I don't know, Saturday or Sunday. And probably go over a watch list for next week as well. Um, Hopefully nobody has any questions, and hopefully this makes sense. My migraine just is getting worse and worse and worse by the second. I almost ran to the bathroom because I thought I was going to puke a minute ago. Um, but yeah, I think I'm going to cut it here. I apologize. I was planning on going over more charts, but I don't have it in me right now. I'm sorry, everybody. Um, if you have, I mean, like most people have access. Like I've posted the link to my trading view, and so you can grab my levels. Or I mean, you can look at this here. Um, you'll have to pause probably, but these are my levels for tomorrow on SPY. All right. I'll try it, Matthew. I took some medicine. It's not doing anything. Took it a while ago. Yeah. Oh, thanks, Gus.
Yeah.
It feels like I'm doing horrible. So I hope you're not just like saying that to make me feel good. But yeah, I wanted to try to do a class for. Oh, and I just realized I forgot to cover one thing that I really did want to cover for new people to the Discord. I mean, when I say that, I'm not trying to exclude anybody on YouTube, but I think a lot of the people on YouTube have been watching me for a while, so you've probably seen this anyway. But we have a lot of new people that join the Discord, um, and that's the I couldn't get them to show up, I think, because okay, here we go. Yeah, orbs. Um, so I'm gonna go over this really quickly. I need to get rid of some stuff off my chart here. It's like pretty hard to see, right? Why is this volume profile still showing up? Oh, there we go. Um, so Shorty likes orbs for trading. If I hide my candles, um, so this shows our um, daily pivot. The daily pivot basically takes the previous 3 day close and divides it, or yeah, divides it by three, and then puts a line on the chart. Um, our previous day close, previous day open, previous day low. Monthly pivot is the same thing as a daily pivot, but it's the last 3 months divided by three, and then put on the chart. Previous day high. Um, so all of these can be used as a confluence point, and then we have our IBL and IBH, which we covered, how you use that for the 88% rule. And then we have our fib levels. So 50% fib, orb high, 272, 1618, 2. And then to the downside, orb low, 272, 1618, and 2. All of these are confluence points. And basically, Shorty says, like, if you're looking to take like a long position, for example, you want like 4 confluence points on your chart that says to go long. So let's say we have, let's see, turn on my candles. or 4 confluence points to go long, or 4 confluence points to go short. So, for instance, at the open, we crossed the previous day high, so you could call that one confluence point. We crossed through the VWAP, that would be 2 confluence points. Our volume is above. I should get off of 30-minute candles. Our volume is above the 20 moving average. I mean, just, like a lot. Cross above the VWAP, monthly pivot, cross through the 2022 VPOC, on and on and on. Once you find like 4 confluence points, you're good to enter a trade long, or 4 confluence points, you can enter a trade short. You can also use your orbs as like for reversals, orb high, or I mean the 272 level here as a reversal. A lot of times you'll bounce off the 50% when you come to it. Or from the downside, you'll reject back down. So those are all just more confluence points. So pivots are just going to be like an area where a lot of times you'll see like a bounce happen or a rejection. So like you can see the monthly pivot here. We crossed through it pretty easily, but then when we came back down to it, it actually would have been a good place to go long. And the retest of it was even better. Same thing with the daily pivot. We actually came down, and that was your long entry there was off the daily pivot. And so it's just one more confluence point. Like if you're seeing, like I was talking about, volume is decreasing here. So you're kind of actually expecting a reversal. And if you see volume decreasing and you're seeing that you're coming down to a level like a daily pivot, you could be like, oh, like that might be where I enter long. And then when you get this wick to the downside, like you could, hop into a trade long, and then you start to see volume increasing. And we rip up. But so like I said, it's just the previous day's close divided by 3. Will give you your daily pivot. Same monthly is monthly close divided by 3. You can calculate all this stuff on your own, but with Shorty's Discord, it's done for us. And for the orbs high, for the orbs, you can actually just draw your fibs. So if you go to like 30-minute candles, oh shoot, your first 30-minute candle of the day, if you were just to grab your fibs and then grab the top to the bottom, that's going to give you your levels to the downside, and then grab the bottom to the top, or sorry, other way around. Top to bottom will give you your fibs to the upside. I don't have, like I have the 50%, but I have the 618. But some of the levels I don't have on my fibs. You would just have to adjust it if you were doing this manually. You would have to go in and adjust your fib levels to match the levels on the orbs. But yeah, you can do it manually. But so yeah, those are just going to be confluence points for entering trades. And they're good to have on your charts. Also good levels for taking profits. Like if you went long at the 50%, your first trim is going to be the orb high. If you went short or low, so on and so forth. So, again, I don't feel like I covered that really well. I apologize, but I think I'm almost dead. There's a small chance that I won't be trading live in the Discord tomorrow if I wake up feeling like this. So if I'm not there, that's why. Anyway, thank you everybody for stopping by. Again, sorry if I did a terrible job. I didn't want to cancel the class, but there's a chance I probably should have. Anyway, everybody, much love. Take care. Have a good night. Okay. Talk to you later. Bye.